What is up, dudes and dudettes? This is Diligence here, and this is around 7:57 on July 2nd in 2021. I think this video is going to be more towards reflection rather than talking about price action, because I think you guys need something to calm you guys down, and I just need sort of a channel to release my own stress in its own way. And as you know, I'm always very honest about my position and very honest about, whether I'm losing money or earning money to my subscribers. And just a disclaimer first, right now I'm actually in a red, and due to Torch is probably heavily in a red than before. Around probably down 5 or to 8% of my portfolio, because I literally invested 1/3 of my portfolio into Torch. And because the video last night I just posted about AMC, I also did a gambling session on AMC by buying some in, and this morning I also bought the dip a little bit. And without going into too much about, the AMC short squeeze, or why this is a home stretch of a short squeeze, and why a lot of people are sort of panic selling MMAT, and why hedge funds are scaring us right before the American Independence Day. It's probably because the long time oppression from the British back in the 1700s, but we're not getting into history a little bit. Right now it's just one of those moments where you sit down and you close your string, you close your stock app, whatever you're using, whatever you're checking, your short volume on Vortex, and whatever you're doing on your computer, whether you use Thinkorswim or you use those Fidelity stuff. This is one of those moments you just stop for 5 minutes in your life and talk to yourself. First of all, you gotta tell yourself that a lot of times patience is the key. And second of all, you shouldn't be scared of massive power or authority in this case. Basically, hedge funds are the people who have the money, right? They have a lot of money in reserve, they have a lot of leverage, their in total margin requirement is lower than most of us, because they have more money. When they have more money, their dick is essentially bigger, and when their dick is bigger, more girls like them, or at least we think that more girls like them, because according to research, sometimes people say that size doesn't matter. But hey, you never know about these researchers, right? Because they can always fuck up their p-value and make it false, like Amy Cuddy in his power pose video. But again, I am no far, or I am, how to say this in a nicer way? My PhD application didn't get into Stanford, therefore I don't really have the academic authority to tell you that a lot of research papers essentially they're essentially a little bit corrupted. But this is a stock video, so I don't really want to go into that. And also, I am not a financial advisor, so anything I say in this videos are for shits and giggles only and for entertainment purposes only. Therefore, I don't give financial advice. But going back to what I'm trying to talk about is, you should have, whenever you're trading, you should always have a Zen mentality. Where you know that majority of the time, right? If we look at statistics about the stock market, if the stock market is a normal distribution, like so, right? If we're going back to college, or for me, I took statistics in high school, and I finished linear algebra by the time I graduated. So if you look at a standard normal curve, you will have a mean, and you will have one standard deviation on either side, two standard deviation, and you have the third standard deviation over here. I probably shouldn't do everything in yellow, should I? So the mean is gonna be blue, and let's see, what color is this? Yellow. So two standard deviation on the side is gonna be green, and the telltale ends we probably don't care because they essentially capture a lot of outliers. But anyways, at this point, we're gonna talk about the mean, right? So if you, oh my god, there are a lot of huge orders coming in right now as we're speaking right now. But price action or predictions for later. I think we're gonna have a recapture day today, but hey, sometimes one of the stock exercises you should do to yourself is in the morning. This is what I do, right? My routine is every single morning I woke up, brush my teeth, look myself in the mirror, and I tell myself that, hey dude, remember, you have the power to destroy yourself today. And you also have the power to make yourself. Why? Because stocks don't manage themselves, guys. We're the manager of our own portfolio. And the reason why we have the ability to destroy ourselves is a lot of times when you're losing, you intend to buy more and buy more and buy more and ignore a lot of signals to see that it's a dump rather than a dip. We're just talking hypothetically speaking, okay? We're not talking about MMAT because obviously from my previous due diligence, you guys know that it is a stock that's pretty good for long-term holding, and due to the thorough due diligence I do, that you can see a lot of potential for this stock. But a lot of times when you're in those flight or flight mode, especially when the hedges do stuff like this, and today's AMC update, you will see even a worse pull down by the hedges. And if you look at Ortex in real time, you just saw like literally in the middle of the market, like around like this timeline on AMC. Wait, should I just show you guys? Around this point, it had literally a 10% drop. You see someone on the market just shorted 1 million shares, like instantly. It just bang dropped on the price value, right? But as I indicated before, for AMC, it's more of like a home stretch for a massive squeeze, and a lot of people panic sell. But it's okay because talked about before. You know those the ape community sometimes paper hand and people get scared. But hey, it's okay, right? And have I ever tell you guys a story where when I was really young, I was climbing a mountain, you know, and when you're climbing a mountain, you know, at first, you know, we were rather fit and everything. We're like, oh, let's go do it. But as the time drags on, one of the problem is, you know, a lot of people give up. So let's just say this is the mountain, right? So that you have the 50% mark, which is distinguish whether, you know, a lot of people would decide at the 50% mark whether they want to proceed or they want to give up. But for a lot of the people that, you know, if eventually, so if we do this as a stock analogy, a lot of people will go up and go up and go up, and they will go around the 75% line to the mountain, and they're going to be like, oh my God, it's so hard whether I should give up or not, you know? And this is the point where actually a lot of people would either go on and make a huge profit or go down and take a loss, right? And a lot of times hedges know this principle. So when you're just around the corner to succeed, they will do something to inflict a huge amount of fear on you and make you give up. Okay? Similar application in life too. A lot of times you're just about to succeed and some random stupid ass shit happens and you just decide to give up. This is what we call a ultimate testimony of either you're religious of God or ultimate testimony of your faith in yourself, right? Every stock you buy into, I don't believe any of my subscribers are dumb. So every stock you buy into, you probably do somewhat due diligence. Not, you know, my level of due diligence, not, you know, I don't know, who is a really great example for someone who does really bad due diligence. Let's just say Elizabeth Holmes investors back in the old days where they didn't realize that a micro device of testing blood is essentially impossible to achieve. Let's just say they do minimum amount of due diligence. But ironically, there are actually huge VC firms who have a lot of resources on their hands, and I think they just believe in the future, and they just believe that something great is going to happen. But anyways, right? So right now you have a spectrum from -% due diligence to Beaver master level due diligence, right? And I believe that, and here is 0%, and I believe that our viewership or our subs is probably going to be on the upper end of the spectrum. So, if you already done due diligence, you already have faith in yourself, then what are you lacking really? Like when people are inflicting fear on you, what are you supposed to do? You're supposed to trust yourself. And you should trust the DD and trust all the work you've done in one stock instead of just panic selling, because panic selling is 100% horrible and it's 100% stupid. And if you are due diligence sub, you should always remember that we are the smarter end of the spectrum, therefore we don't do stupid stuff. So as far as this reflection goes, I just want to let you guys know that I'm also in the red right now. How am I feeling? I'm feeling okay. I just need a channel to talk my heart a little bit and tell my sub that what is really going on here. And we're at the home stretch right now. And for those of you who are just holding MMAT, as you know, George is having a press conference. And what would most investors do before a press conference? They would probably buy. Because, most people are also as sneaky as I am. They're probably going to be more sneaky than I am. So at the end of the market close, you will actually see a volume increase, right? Because we can divide a day in half. Lunch is where your reset. Lunch is where your reset point is. So let's just say in the morning, a spooky, sneaky, stupid attack goes down. And after lunch, people are like, oh my god, I just had the best lunch of my life. Maybe the day is going not as bad as I thought. So what they do, they leverage a little bit more and they buy in here. And then at the end of the market, they're like, oh my god, it recaptures. If it recaptures, why don't we buy more? So after market, they bought a bunch of shit. Even though if you're a retail investor, you buy in aftermarket, it's kind of sad. Why? Because you literally don't have any control over the weekend, but the hedges can do something sneaky to putting orders way before than us, and they can sort of leverage on the weekends and everything, and do sneaky stuff before the market open. If you want a fictionalized but sort of semi-real example of this, you should go watch Billions. In one of those episodes on season 5, we will see Bobby Axelrod trying to dump all their natural gas position because one of the oil pipelines is just about to explode. But anyways, I think this is one of the reflection sections that I'm going to post regularly from now on to my channel. Because, even though we have more and more viewers, I still have to be a little bit selfish to myself. Because one of the major reasons I started this channel is to have a trading journal. And as you know, a lot of trading journals are more about psychological warfare rather than about all of the technical stuff. Because we can just spend all our time reading books about technical stuff, but psychologists really drive our profits. Because as a trader, your job is to make decisions on the spot based on your fundamental analysis, based on your technical analysis, based on your candle chart, under huge amount of pressure. Because let's just say right now we're only trading 30K portfolio, or some of you are trading, 200K portfolio, or whatever, because I don't really know on how much money my viewers are usually trading at. We have people who just started trading with a couple of $1,000 in their, disposal. And we have people who probably, because I know one of you said you bought 200 call options for MMAT. That means your portfolio at least have, let's just say, 20,000 and maybe even more than that, because I don't know what strike point you bought your options at. But at this point, recap, trust yourself, understand what risk you're taking, what is your maximum / 70% sure maximum downside, what is your potential upside. Do a pro and con or cost benefit analysis, do a risk and reward analysis, calculate your leverage correctly, make sure you don't get reverse margin called before any huge pull up is going to happen. Because usually what happens to all these hedge fund boys is before they got margin called, they want you to get margin called. Alright, I think this is it for this video. If you like those kind of content, leave a comment down below. Say, due diligence, I love those psychological stuff, and because you rambles and you stutters a lot, you also give us a lot of information about the market. I love those content. Please keep posting those. For those of you who are interested in more like a philosophical approach to trading and more of the sociology, mathematics, and the more philosophical side or academic research side of the market, also comment down below. Because I also like to do a lot of theory crafting and maybe use quantum mechanics or use sort of some physics notions in physics to explain how the market really works in terms of momentum and push and pull. Because every support line essentially have a gravitational force, and every support line you can look at is sort of like a time-space continuous sort of thing. And eventually what we do right now doesn't really matter in 10 years. Because, going back to the previous thing, right? This is why you have to watch till the end. Because I haven't really explained the normal standard curve yet. So if you just look at the data, the mean of NASDAQ index is actually on the positive side. So, which means that over 60% of the time in the market, or even over 95% of the time in the market tends to go up, then go down. So as a rational human being with a big brain who loves beavers and unicorns, we know that betting upside is more beneficial than betting downside. So let's use this. And this is sad. And as most of my mentors tell me, it is more beneficial to betting on the upside because you have more possibility of something happens rather than betting on the downside. Because what is the upside for betting up? Well, you have literally unlimited upside, right? Because when Jeff Bezos' stock is still at $0.96, you never know that one day, in 20 years, his stock's going to trade at $2,000. And even inflation adjusted, you at least made about $1,500. Same thing with Tesla, same thing happened. But what happened if you were short selling? If you're short selling, the maximum downside for a stock is for it to reach $0. I mean, we both don't really want this to happen because a lot of people might suicide. By the time their stock becomes $0, a bunch of people dies, a bunch of things file bankruptcy, sad shit happens, and perhaps there's going to be a recession. And what happens during recession for traders? We literally don't really make that much profit because when recession happens, it's already too late to short, and it's probably time for you to buy the dip and wait. But anyways, this is it for the reflection video. If you like those content, please smash that like button so we can beat the YouTube algorithm, and leave a comment, say your opinion on this reflection, whether you like it or you don't, right? And also please sub if you're new. Guys, see you on the upside.